Hey, happy Tuesday. This is Jack Tubbs from the J Team at Realty One, wishing you a fantastic Tuesday. Hope you're having a fantastic day. Hope you are prepped for the holiday this week. Hope that you got the turkey, the stuffing, everything ready to go for Thursday. I hope the preparations are here. I hope you get a chance to spend time with family. And of course, we want to practice safety. So if it's got to be socially distanced, however you got to do it, but I hope you get a chance to spend some time with friends and family and give thanks on Thursday. Hey, I want to kind of continue on, and maybe we can get finished up today about getting ready for preparing for a mortgage. And we talked about many things. We talked about making sure that we have all our income streams together. We know exactly how much we're bringing in on a monthly basis, what our monthly expenses are so we can get a debt to income ratio, getting our credit score together, and also looking at the recommendations where we find, if we go to use one of these credit score apps, they also let us know, hey, if you pay this credit card down, whatever, this will raise your score by this much, all these things, doing everything that you can to get your credit score to where it is at the most optimal point for you. And then also your down payment. We want to figure out what your down payment is going to be. See how much you've saved up. See if maybe you can get a gift. And also if you get a gift for help your down payment and your closing costs, we have to have what's called a gift letter. Before you couldn't get any help with the down payment, but now you can have help from a friend or family member gifting you money for down payment and for closing costs. But all we have to have is a gift letter, and they also have to know the bank account from which that money came from. They need a paper trail. But a gift letter is one of the things that a lender is always going to ask for if somebody blesses you with money for your down payment and for your closing costs. So we want to have that. And the bigger your down payment also opens up different options of how you can finance your property. It means, there are so many programs out there that, FHA, BA, rural development, also a lot of different conventional programs out there now. There are some non-conforming loans depending on what kind of property that you buy, all sorts of different things. But the larger down payment opens up more programs to you to help you find the program that fits you the best, gives you the best interest rate, and brings you a payment that you're most comfortable with. Now, another thing that you have to do is do some strategizing, do some planning, figure out how you want to finance this thing. Not only the type of product that you want to use, like say all the different things I just named, but like an FHA 203K, one of those things that is a renovation loan that you can get some money above and beyond what the purchase price is to be able to improve a kitchen or repair a roof, something like that. But once again, it's got to be done. The estimate has to come from a licensed and bonded contractor, and then the work has to be done by that same contractor because they are going to pay the contractor direct as soon as he completes the job. So just one of the things you want to think. But also when you're thinking about planning out how you want to finance it, I'm also talking about the length, because we can do a 15-year mortgage where you're going to pay a lot less interest because it's not going to be amortized over 30 years, but 15 years. Also, the rate is usually more favorable. For a 15-year mortgage, it's usually about a half point lower or somewhere in that neighborhood, which can save you a ton of money even over a 15-year loan, let alone a 30-year loan. But you know what? A 30-year loan seems to be the thing that fits most people's budget the best. So, but think about it. If you can afford to do it on a 15-year basis, then then when we talk to our lender, let's talk to it. See if that is really a viable option for you, because it'll save you a ton of money over the life of your mortgage. Find out if there are any prepayment penalties when you're talking to your mortgage officer or to the loan officer. Find out, if you were suddenly blessed with a large lump sum of money and you decided that you wanted to pay off your mortgage, would there be a prepayment penalty? And you're going to find most programs don't have a prepayment penalty after the first 2 or 3 years. The first 2 or 3 years is where you, of course, pay the most interest, and that's the way that banks and lenders make their money, is on the interest that you pay. So remember that there's usually going to be some sort of prepayment penalty in the first 2 to 3 years. After that, no, there's not going to be. So just realize that going in, that there may be some prepayment penalties for the first part of the loan, because that's where the lender is going to make their most money, and they're going to want to make sure they make their money by receiving the interest that you owe on the mortgage. But there are some programs out there that don't have any prepayment penalties. Most VA loans don't. I believe some conventional loans out there now don't have a prepayment penalty. It all depends. And some may say, okay, well, you know what? There will be no prepayment penalties, but we just want you to pay a point and a half up front. So these are the things that we have to discuss, because that's going to be part of your closing costs. These are going to be expenses that are going to affect you as you go through the mortgage process. So you want to talk all these things out with your mortgage officer, because even rates can be greatly improved if you're willing to pay a point, and that's an interest point. Like if it's, if it's a 1%, if it's 1 point, it's 1% of the loan amount. So they're going to say, well, if it's a $150,000 loan, we want $1,500 up front as a point of up front. That way they're going to have some of the profit already built in. They may take away prepayment penalties, and they may also be willing to drop your rate some. So these are other things that you need to think about, discuss, and find out where you sit as far as your down payment and the money that you have towards closing costs and doing things like buying points. And be really targeted. Once you have an idea of what you want to, what kind of mortgage you want to have, if it's a 15-year, if it is a 30-year, do you want to go FHA? Do you want to go VA? Do you want to go rural development? Whatever it is that you want to do, be targeted. Talk to at least 3 lenders about the exact loan that you're thinking about. Have a very targeted. Don't go shotgun, because you know what? Shotgun will bring you so many different rates and plans and all this, and they'll end up becoming confused, and some will be promising you things that they truly can't deliver on. Be very targeted. This is the kind of loan I want. These are the rates and terms that I'm looking for. This is the interest rate I've seen advertised in your advertising. When I talked to the person before I sat down with you, they said these are my options as far as interest rates, repayment plans. Can I pay points up front? Is there a prepayment penalty, et cetera, et cetera, et cetera? Be very focused. Know what you want. That way you're not only going to expedite the time that you spend with the loan officer, but you're also going to walk away from that meeting knowing exactly what you're looking for. What is my payment going to be? What are my options as far as length of time? What can I do about prepayment penalties? Can I pay points up front? What are my closing costs going to be? All these different things, because you're going to find out different loans are going to have different closing costs, different prepayment penalties, all sorts of different things. So be very targeted, because if you take a whole bunch of different programs into mind, you're going to start to, oh, did the FHA say this and the VA was this and all these other things. So you want to be very, very focused on the kind of loan you want. After you do some research, after you figure out how long you want to finance it, what kind of product are you looking for? Are you looking for a home that might be slightly distressed? Will an FHA 203K loan be the thing that fits your needs the best? All these different things have to be taken into account, and then you can be very focused when you sit down with that loan officer and walk out of there knowing whether this is your best option or not, okay? And also know, if they say not now, it doesn't mean never. And so I've seen some people hear not now, but they pay off 2 credit cards and get some erroneous reporting that has been on their credit score cleaned up. Within 6 months, they're back in front of that same loan officer signing a loan application, and they're ready to go out and hit the ground running looking for a new home. So don't be discouraged if you hear not now. And also, as I said, check with 3 different lenders, because sometimes a lender will have very stringent programs that if you don't meet every aspect of their program, if you don't check all the boxes, they're just going to say not now. But you have some lenders that will have a little bit of wiggle room, and they'll also be able to help you. They might even help write letters for you that can even take care of some bad credit reporting almost immediately and get you in shape to be shopping for that new house right away. So spend some time. Like I said, it's really important that you spend time looking at your credit score, looking at the things that are reported, because you know what? I think probably 70% of the people out there have some credit reporting on their credit score that is incorrect, or something that's been paid off that still is looking as open. We see these kinds of things all the time. With a gentleman that I was helped selling his house, the bank wouldn't sign off on his house because he had a HELOC, a home line of credit, a home equity line of credit that he never used. He never borrowed again. He was paying like a $50 a year fee to keep it open. He had done all that, but when it came time to close, and it would have been about 15 years prior that he'd opened it, but never used it, thought he might use it for something, never did, but the bank would not sign off of it until he paid the fee that he hadn't paid for the past couple of years. And also they wanted it closed completely, so he couldn't turn around and try and use it after the closing and take some of the supposed equity he had in the house, so that it had to be closed. But you know what? You just got to check on all these things, because you don't know if you have an open line of credit that you don't even use, that you forgot about, that you never used. But you know what? It still counts against your credit score. So you want to make sure that those things are taken care of, that they are closed, or if they are brought up to date, whatever your lender advises you to do. So, and as I said before, if you need some help, if you need a referral to a lender, I have 3 awesome lenders here in the Valley that will help you build your credit score. They'll spend time with you. They'll sit down with you. They'll go over your credit report with you in case there's some things on your credit report that you don't understand. And they'll also help you clean it up. They'll also direct you on things that you might want to pay down, and all these other kinds of things to make sure that your credit's ready. And also they can make sure that you help you understand the kind of down payment and closing costs that you need to be ready to close, because that seems to be a shocker for a lot of buyers, that when I've got my down payment, we're ready to go, they give their down payment, they show up at the closing table. What do you mean I have $7,000 worth of closing costs? And they don't realize that taxes, insurance, origination fees, all these other things have to be paid at close, unless the lender is willing to roll those into the mortgage. And sometimes they are, but not a lot of them are. So realize that these are things that you have to be prepared and you have to know about going into the process. And the last piece of advice that I have for you getting ready for a home mortgage is that once you're approved, once they say yes, you can go shopping, make sure that you don't open any new credit. No new cars. Don't go furniture shopping. Don't go appliance shopping. Don't open anything. Don't buy anything. Don't even think about doing anything that would cause you to use credit, whether it's a credit card that you have clean and clear and you're saving it to go out and buy that new furniture or new TV for the house, whatever. Don't do it until at least 30 days after you closed. Make sure that everything's closed, everything's settled, the closing's recorded, that you have keys in hand, that the seller has got their proceeds from the sale, that the mortgage is in full effect, that you made your first mortgage payment. Then go out and buy the furniture, go out and buy the new car, make improvements to the house, whatever it is. Just don't do it until you own the home for 30 days. Now, I know that sounds long, because most people say don't do anything until after close. Just take my advice. Just take this piece of advice seriously. Don't buy anything until 30 days till your first house payment's made. Because if you buy a large purchase that can actually alter your credit, your lender may have an issue with it immediately. Wait 30 days, make that first payment. Then you know what? They're going to take their eyes off of you, except for when your payment's due. They're not going to review your credit score. They're not going to see any credit that you might open up. All these other things. It just makes the whole process that much easier. Hey, and once again, if you need any help with a lender, please feel free to reach out to me. You can get a hold of me direct, 248-330-7972. Once again, 248-330-7972. Email me, jack@thejteam.house, JACK JTEAM.house. Or you can call the office and talk to any of my team members, 623-252-4061. That's 623-252-4061. Hey, this is Jack of the J Team from Realty One in Surprise, Arizona, wishing you a fantastic Tuesday. I will see you tomorrow with a little bit more about what's going on in the Phoenix real estate market. Have a great day. Bye-bye.